Hey, wonderful. Hello, everybody, and my name is Arvind Sabhaney, and I have this privilege of running a state-of-the-art institute where we teach event management. It's called Team.i, the Entertainment and Media Institute. What is so different about our institute? Essentially, we are talking about a version 2.0 programs that we teach, which means that what is happening today is what we are teaching you and we are teaching our students. Taking this forward, today we have with us a very young and interesting gentleman whose name is Rajesh. Thank you, Rajesh, for being here.
Pleasure.
Rajesh is a chartered accountant by choice. Very difficult to get these kind of people, I believe. A chartered accountant by choice. So what we have done and what is we do at the institute is that we talk to people in the various facets of event management, and finance being a very, very important part of any business, including event management.
Yes.
And having said that, we said to Rajesh, come take care of our accounts. We talk to a lot of event managers, and coming now from the horse's mouth, Rajesh, tell me how different is event management finance, or event finance as I would like to call it, compared to any other industry that you have been dealing with?
So, to be more specific actually, event management company is a service sector and it deals with too many people, maybe the vendors or the workforce. So you people have too many vendors, you people get in touch with lots of people on temporary basis, you hire them on temporary basis. So taking care of accounting and compliance. So this requires a next level of efforts, and the kind of services what you have you provide are very different, and you always come out with new ways and provide new challenges for the accounting team. So it's reasonably different than any other regular ordinary sector of who is providing services.
I've heard this in many places that event managers are creating problems for everybody. I'm happy to know that you're creating problems for the finance guys too, and I'm happy to know that.
And that's one way of remuneration for us.
Yeah, remuneration. Yeah, so that's interesting. But coming back to something interesting that you said, Rajesh, earlier, is that event guys deal with a lot of vendors.
Yes.
For example, for a specific event where there's only one outgoing bill most of the time, or maybe one more with an advance or something, there could be as many as 30 to 40 vendor bills that come in, right? Is that a challenge from a finance person's perspective? Yes. What are the challenges that you face, and why do you think, or do you think there's any way that we can streamline these challenges?
Excellent. So this is a very good question. Now, when you come to the understanding of the services that an event manager provides, he provides varied kind of experiences through his events. So the kind of vendors what he chooses for a particular event, he might not choose for another event. Sure. So every time you might go for different vendors, not just for the same event, you might go for multiple events, multiple vendors, you might not go for the same vendor again and again. So in a year, if you are providing maybe few services, you would have met with around 500 to 1000 plus vendors. It is definitely a next level challenge for an accounting team to keep a track of all these people, because you will be paying out money. We have to keep a track record of each and every bill that they are going to give, and we have to comply with the laws relating to the GST and the income tax, wherein we have to ensure that these people, we have to follow up with each and every vendor over there, whether they are paying the GST, whatever they are charging in the bill, and we have to take our input tax, and we have to do the reconciliation with regards to our input tax and the returns what they file, and also we have to ensure that we are deducting TDS wherever applicable for these vendors, and we have to communicate with these vendors on regular basis. We have to provide their ledger accounts for all the doubts that they have. So it's a big time challenge for the accounting team. As the event management team, the kind of efforts what they put on outside the office is same and might be even more for an accounting team which is taking care of the event management company. It's reasonably very challenging than any other industry in the things available over there.
The smile on my face must be telling you it all. and how much we event guys enjoy traveling the world and coming up with great products in the market. Because it's not everybody who can really go out into the market, trouble so many people just because you believe in the product. But I must tell the viewers one thing over here about Rajesh is that Rajesh is one of the younger or the youngest chartered accountant in this part of the world. Also, having said that, he is one of the few people who's actually an authority on GST. And I'm really happy to know you, Rajesh, and thank you once again for being here. Having said that, when we talk about GST, which is today 18%, and thanks to so many things that we hear that it could be coming down, but I'm not getting into that facet of the discussion today. I'm going to talk a little bit more about the TDS, and a lot of my friends, event guys out there, and a lot of students who are listening to this one, I'm sure, 194J, 194C, service, contract, client is deducting 10%, we are shouting, we are screaming, we want it to be 2%, but what is the real truth behind it?
Okay.
So I want you to address this more to a client who could be listening to this, because we have this challenge on every bill or every new client that we meet, where we need to educate them. And yeah, over to you, Rajesh.
Thank you. So let me give a little background about what exactly is this TDS, and then I'll move into the understanding of 194J and say a little bit, and then get into the event. It's going to take a little longer, but please bear with me. So TDS, it stands for tax deduction at source. Now normally we earn our income in this year and pay tax in the assessment year. But since government does not want to rely upon people paying tax on their own, it normally imposes the responsibility of the person who is making the payment to the party or the vendors to deduct the tax at certain rates specified in the provisions for different kind of services and deposit to the government. So if I am going to take service of Arvind for any event, I am impose the responsibility to deduct tax from the payment that I will be making to Arvind and depositing the same to the government in the same year. So this is the logic behind TDS, tax deduction at source. Now as I said, there are different rates applicable for different kind of payments. Now there are varied payments, salary, contracts, rents, commissions, interest. There are lots of things that comes into picture. Now there is a big time confusion between 194J, that is TDS on professional services, technical or royalty services, and also TDS under 194C, that is TDS for contract. There has been a big time difficulty in properly classifying as to what is the rate that I am supposed to consider for deducting tax at source for any payments that I will have to make for the events or the event managers or their services. Now this all depends on the way I am going to put in the contract with myself and the client. Right. So an event manager, if he is providing a service, he has to get into a contract as to what are all the services that he will be providing and what all the things that he will be providing. Now in this contract, he is going to give his requirement, he is going to give a work order normally, which gives out the details as to what are all the things that he will be providing and what is his fee separately. Normally this is a scenario in the normal situation. So whatever is the materials that he will be using, he will give a detailed breakup of the same. Along with that, at the end, he is going to charge his fee separately. Event managers, fee separately, or as things may be. Now, since we have a breakup over here, event is a service which includes two things. He is providing services also, and he is providing materials also. Now, if we look at the perspective in this manner, as per Income Tax Act, wherever I am providing a combination of both materials and services together, it is normally tend to be considered as works contract or a contract.
I would like you to repeat that for the sake of our viewers. I think this is a very key thing that Rajesh has just now said, and a lot of us event guys miss this point, and maybe the client also doesn't really understand it.
So if we are able to go through provisions of section 194C, it gives us a detailed understanding and definitions of the word contract or the works contract accordingly. So this gives us a better understanding as to what exactly is a kind of service. Now, if the client himself is arranging all the materials for himself and the event manager is required to only organize the event, there is only a service portion that is being provided, and this is technical in nature. So there the companies are suggested to compulsorily deduct tax at 194J, that is deduct tax at 10% for the service portion, because there only the service portion is involved. But whenever we are talking about an event, there are lots of materials that is being brought in, and there are lots of subcontracts that is being provided. To conduct an event, I need lighting, so I will get a contract with a lighting fellow. I need sound systems, I will get a contract with sound systems. I need production team to lay down the stage and the setup, so I will be getting into contract. So this is a contract that is being taken to provide an event, and this will have multiple parts which will be subcontract to various people. Now, in a contract, if we understand, most of the part of the amount goes off for the materials itself, and a very less margin is available for as an income for the contractor. Now, for the benefit of these contractors, that is the reason only 1 or 2% is being deducted as tax at, tax at source. So we have to understand, event management is a kind of service where at least 90% of the amount, easily 90% of the entire contract value in normal scenario, in any given scenario, will be taken out for the materials or the subcontracting services. And normally only 10% will be the event manager's organizing fee or the management fee which they will be charging. And if the companies end up deducting 10% of the entire contract value of the invoice that they will be making, they will be basically eating out the entire chunk of whatever is only eligible for the event managers, and thereby they will be end up making it only at break even. And they will have to wait until the income tax returns are filed and their tax returns are assessed, and then the refunds are issued. Until then, their profits are stuck with the income tax department.
I think this could
I would want to further add up onto this. So it is the way these event managers prepare the work orders and give a breakup, based on which the people, the company also, there are already sufficient notifications that have been provided as to what kind of contracts, what is the TDS supposed to be made in case of IPL. There is there are different things. We can get into that nuances separately on need basis, and they can definitely come back to me. So as of now, what I would like to give a blanket statement is, so kindly give a breakup as to what is the management fee and what is the other materials fee, so that it will be easy for the companies also to take this as a consideration, because they have the obligation to be answerable to the income tax department. They have to be answerable. If they are deducting less, then they are supposed to pay penalty and interest and all these things. So kindly give a breakup as to what is the management fee and the working fee, so that the company will have the opportunity to deduct TDS accordingly on the portion of the management fee separately, on the contract value separately.
But I would take another 30 seconds more. I know we are running out of time, Hari. I'm sorry. Yeah. What happens in an ideal case situation? I think what I've understood from what Rajesh has told us right now is that it's very important on how the contract comes to the event company.
Yes.
It's very important on the wordings of that contract.
Yes.
It's very important that there is no mention in that contract of the equipment that we are subcontracting.
Yes.
If we have mentions of this equipment
and the breakup
then there would be a very clear demarcation of two kinds of TDS, that is TDS under 194J, which is 10%, and TDS under 194C, which is 2% or 1% depending on who you are. Right?
Yes.
So I think very important on how the contract is made. Also, if there are any clients listening to this, Rajesh came up with a very valid point. We do anywhere between 5 and 25% margins. That's our business. So do not kindly look at cutting under the 194J, which is the 10%. Yeah. So this takes a long time. for the event guy to rotate around his money, and it becomes quite a total financial hazard for him in the long run. Thank you so much, Rajesh, for your time. I really, really appreciate your time over here. Looking forward to seeing you again.
Pleasure. Thank you.